Here's something critical that most Colorado Springs home sellers don't fully understand about capital gains tax, and missing it could cost you tens of thousands of dollars. I'm Juanita, and I specialize in helping Colorado Springs home sellers to confidently navigate the home selling process. And today, we're going to demystify capital gains tax when you sell your Colorado home, ensuring you're empowered with knowledge and to how to avoid costly surprises at closing. If you're considering a move in Colorado Springs or need guidance on selling your home, I'd love to help you put together a personalized game plan. There's a link in the description to schedule a quick free chat with me. No pressure, just honest, patient advice. So let's get into it. Understanding capital gains tax and the basics. So here's the big picture on what exactly is capital gains tax when you sell your home. Simply put, it's a tax on the profit that you make from selling an asset. And your home is often your biggest asset. So, for many of my clients in Colorado Springs, especially those who have lived in their homes for 20, 30, 40, sometimes or more years, that profit can be substantial. And imagine buying a home in the 80s for 150,000 and selling it today for 750. That $600,000 difference is your capital gains. And the good news is the IRS understands that your home is not just an investment, it is where you live. And so this brings us to a crucial piece of information, the primary residence exclusion. The primary residence exclusion is your biggest tax break. This is where most Colorado home sellers can find significant relief. The IRS allows you to exclude a certain amount of capital gains from your taxable income if the home you sold was your primary residence. So for single filers, if I could say that word, you can exclude up to 250,000 of gain, and for those married filing jointly, it's up to 500,000. So to qualify, you must have owned your home for at least 2 years and used it as your primary residence for at least 2 out of the 5 years leading up to the sale. I recently worked with a wonderful client, Margaret, who was downsizing from her family home in Briargate. She had lived there for almost 30 years, and like many, she was worried about tax implications. And because she met the primary residence exclusion criteria, a large portion of her profit was tax free, which was a huge relief for her and allowed her to confidently fund her retirement. I want that for you as well. Just know this is not tax advice, okay? So, special scenarios are inherited homes and life transitions. If your situation isn't straightforward, perhaps you're selling an inherited home, or if you've gone through a divorce or a spouse's passing, these life transitions often come with unique tax considerations. So, for inherited homes, you typically benefit from a step up in basis, and this means that the home's value for tax purposes is reset to its market value on the date of the previous owner's death, significantly reducing the capital gain you might owe. This is a common scenario I see with clients managing estates in areas like Flying Horse or Black Forest or Powers area, Broadmoor. We just have so many areas here that I do business in. And if you've been through a divorce and you've received the home as part of the settlement, or if you're a widow or a widower, the exclusion rules might still apply, or you might even be able to claim the full 500,000 exclusion for a period after your spouse's passing. These situations are why it's so important to understand your specific circumstances. And if you need a really great financial planner or a CPA, just let me know. I'm happy to refer you to my list of vendors and providers. So, strategies to minimize your tax burden and when to get help. Beyond the primary residence exclusion, there are other strategies to consider. So, for instance, if you've made significant capital improvements to your home over the years, think major renovations, not just routine repairs. These costs can be added to your home's basis, effectively reducing your taxable gain. It's critical to keep good records of these expenses. And another point is timing. If you're close to the 2 year ownership or residency mark, sometimes waiting a few extra months can really make all the difference in qualifying for the exclusion. While I can offer general guidance and help you understand the process, I'm definitely not a tax advisor. So, for personalized advice, especially with complex situations or large gains, always consult with a qualified tax professional. Happy to refer you to one if you need one. They can review your special financial picture and help you navigate the nuances of the Colorado and federal tax laws, ensuring you don't leave any money on the table or face unexpected liabilities. Understanding capital gains tax is just one piece of the puzzle when selling your Colorado home. My goal is always to empower you with clarity and confidence through every step of the process. And if you found this video helpful, please give it a thumbs up and subscribe for more insights into the Colorado Springs real estate market. And if you're ready to confidently navigate your home sale, remember, I'm here to help. Click the link in the description to schedule a free, no pressure, no nonsense meeting with me. I want to be here for you and to be your partner and your resource for all things real estate, no matter where you are in your home journey. I have a team of professionals waiting just to help you make all of this happen and as stress free as possible. I'm Juanita Simpkins, and I'm here for you when you need trust and truth in real estate.